Good day, everyone. Welcome to the Crypto and Forex. And today I'm so excited because I will be teaching you the best time to trade, and I'll be giving you reasons and explaining to you why you should trade in such times. Now, this is just my way of sharing my experience with you. So I encourage you to watch this video to the end. Don't skip any part of this video so that you won't get confused at any point of this video. Now, I want you to do something quickly. Every distraction, keep it aside and focus on this video because it's going to be as brief as possible, as brief as anything that you could ever think of. Now, this video is intended to help traders so that they can be able to know when to trade and when not to trade. In fact, it will even shape your trading career. Why? Because you know when to rest and when to trade. Now, I want us to understand that institutional traders, hedge fund, and retail investors are the ones that normally move the market. Now you discover that there are times that we have range in the market for a long time, and then all of a sudden there is massive move in the market, such as this. Now look at this. There was a consolidation, and then all of a sudden we saw a massive move upward. Now this is a sign that institutional traders, hedge fund, or retail investors are back to the market. But whenever you see consolidation happening for a long time, it means that there is absence of institutional traders or retail investor, hedge funds in the market. So retail traders are just trying to make profit by all means, and something like this, you discover they are just trying to make profit. You see here is going down, but not with volatility, not with energy. It's going down, not with volatility. Now that is a sign that institutional traders are not available in the market. Now put this at the back of your mind. When there are institutional traders, when we have hedge fund, we have market makers, we have the retail investor, the market will definitely have volatility. It will definitely move. Now I want us to know this, that very importantly, take note of the month of September to November. Now September to November are the most volatile month of the year. Now I'm now starting with the month of the year before I come to the time of the day that you can trade to make profit. The best time. Now the best month of the year for you to be able to make good profit, the best month that has high volatility, is September, October, November. These 3 months have high volatility in the market. Why? Because the retail traders, the hedge fund, the retail investors, sorry, the hedge fund, the market makers are coming back from summer break. They take their family for summer break, and then even individuals went for summer break, and so the market will become chubby. It will lack volatility, it will lack momentum, no energy in the market. You'll be seeing something like range. You'll be seeing something like ranging market. Now, this is what August, like, yes, August. So you will see most at times it will be ranging, but when you come down to September, October, you discover that there is always good moves. There is always good trend. You discover most of after this is May, you discover that we have more of consolidations, more of little trader moving the market. But when you come to September, you can see, when you come to September, you will see that we have major moves. In fact, from September, October, November. If a market start moving bullish, it will go bullish throughout till November ending. If it is bearish, it will move bearish till November ending. Now that is how institutional trader used to move the market, giving volatility in that at that time. Now, during summer break, market makers and market activities is very low. Market makers are not in the market again because they went for what? They went for vacation. Institutional traders, hedge fund, we have hedge fund managers, we have retail investors. All of them are on what? On vacation, which lead to low volume and flat market. You always see we have consolidation, range, accumulation without any distribution in the market. You see market moving as if it does not have strength. That is lack of volatility. Now, but immediately September reaches to November, September to November, you discover something now. The big boys will be back from the market. The big boys, in September, you see a big boy, you see spikes up and down. The big boys are now back in the market. Now, the big money guys are now back in the market. That's the institutional traders. The institutional traders are now what? Back in the market. The hedge funds are now back in the market. We also have the retail investors are back in the market. Now, their return in the market means that there will be deploying of millions and billions of naira to the market, which cause market volume and volatility. Look at it now, you can clearly see it now. This has been a buy since. You can see buy, you see the buy, you see. That's what I'm telling you. When it start like that till the end of November, you see the buy. You see when it started the buy, it started from here, and look at it. It has been buying, up until this time, before we saw a little sell and then back to the buy. You see it now. It will continue buying, which means that USD card will continue buying. You see it continue buying. This is September 23rd. You see it. This is September. Now this is last day of September. Now we have entered October and it is still buying. This is what I'm talking about. Take note of this. Don't skip any part of this video. Now, any movement that starts from September, if it's bullish, you see USD card is bullish. Now this bullish movement will start in November, because the big money guys are back in the market after their vacation. They are back in the market. Put this at the back of your mind. They are back from the market, so you will see that market will continue. USD card now will continue moving bullish, no matter the retracement, no matter the pullback. Now after that the big money guys are back from the market, we see volatility, we see market volume increase, we see that retail traders are now motivated to enter the market. That's the second thing. Retail motivation skyrockets. Retail traders motivation skyrocket. Why? Because they are now seeing that the big guys are around and the market has volume now. Market has volatility now. So what they do is that they begin to motivate themselves to return back to the market. Now individuals are being motivated to what? To return back to the market. That's after they have spent their money during the holiday, the summer holiday. Now they now have to refocus in this season, which is the September, October, November. They will refocus so that the distraction of the summer will not take away their trading career. Now most of them will have to refocus now and take away distraction from them. This is the only way market will move, because of the returning of traders, the market will what will move. And if you want to make profit as a retail trader, you too, you can return back after your break, after your vacation with your family, your friends, and everybody. You can what you can return and join the big guys in trading. And after this, one of the things that happens in this September, November, the third thing that happens is that you see clear trends. Just like the way I showed you now, there is clear trend, bullish trend, bearish trend. There is what? There is clear trend in the market. Okay. Now look at this. You see clear trend. This is bullish. You see it, uptrend. No matter the pullback, you see it still continue what? Uptrend. It still continue what? Uptrend. You see it. It is uptrend. This is just a pullback. You see it has returned back to uptrend. This is just what? Uptrend. So you see clear trends. Now, these clear trends comes with major players which are back to the market. Now you see clear market structure. Clear market structure, double top, double bottom, triple top, triple bottom. You see A, you see Z, you see all those chart patterns. You see clear support and resistance. You see clear breakout following through more consistently. You see clear breakout. There is no false breakout most times. You see clear breakout. You see clear pullback. Clear pullback. You see clear setup in order for you to trade. Very clear. You see it very clear. Easy setup for you to trade. You see it very clear. Easier for you to identify and for you to trade. The setups are easier. You see it very, very clear. From September, October, November. Put this at the back of your mind. You see it very clear. You see it, you see this very clear. You see it. Look at what I'm talking about. Look at what I'm talking about. Very clear. See it here. You see the levels here. See the levels here. See the levels here. Everything is just clear. Look at the levels. Everything is just clear for you. It's just clear for you. And this starts from September, October. So this is the period. Why? Because I'm doing this video in October. This is I had to back test and check everything before I do this video. That is why I'm doing it at October, not even September. So now you need to focus on few of the things I'll be telling us, I'll be teaching us. When you want to be successful in this period, you need to focus on few of these things. Now let's move into that. I just told you as regards the month. Now let's go down to the timing and the season of the day. Now the first thing for you to focus on liquidity session. Focus on liquidity session. When I'm talking about liquidity session, we are having the Tokyo, Asian, London, and New York section. Now when I'm talking about liquidity session, I'm talking about section that has high liquidity and volatility in the market. And the only section that has such kind of thing are the London section and the New York section. That means you are trading at the opening of the London market and then the opening of the New York market. Now, when you trade at those sections or the overlap of the sections, because all the sections usually overlap, when you trade at the overlap of the section, you discover that you have high volatility resident in the market. There is high volatility, there is strength, which means that within few seconds, few minutes, you make massive profit. That's number one. Make sure you focus on liquidity what section. Trade during the London section and New York section. That is when you trade and you see the major moves in the market. When you trade these sessions, you see major moves in the market. Then number two, you need to focus on high time frame use. You need to focus on higher time frame use. Now when I talk about higher time frame, I'm talking about time frame from 15 minutes, 1 hour, 4 hours, 1 day, etc., etc. Now these are higher time frames or high time frames. Why I'm saying we should focus on high time frame is because trends are more strong on the higher time frame. Trend are more strong on the higher time frame, and you will see the trend clearly on the higher time frame than the lower time frame, like the 5 minutes time frame, the 1 minute time frame, etc., etc. Now focus on higher time frames so that you see clear what you see, strong trend. You see clear trend in the higher time frame. And then the third thing is that you need to ride the trend. You need to trade along the trend. Don't fight the prevailing market direction. Don't fight. You see, when you begin to counter trend, for example, this is a buy, and then you begin to what? You begin to sell. Just imagine this candle. Only this will scare you. Only this particular candlestick will fear you before it will continue the buy. It will fear you. So, like for example, you are here and then you are beginning to sell, is actually wrong. You don't need to counter trend. It is said that the trend is your friend. There is a video I did on um, um, following the trend. It is on this YouTube channel. You can just check up on it and watch so that you can learn how to follow the trend, how to trade with the trend. There are indicators that help us, market structures that help us to trade with the trend so that you will not make mistake. Now focus on that. Focus on that. Trade with the trend. Don't go against the trend, which means you should not trade what counter trend. For example, now you see we are going up for a buy, which we know that's a trend, overall trend. Then there is a pullback. This particular cell, this particular cell is actually a pullback, and it's not good. It can what? It can take you out of the market. It can take you out of the market. Now focus on what? Focus on trend. Then the fourth thing is that you need to set limit orders. You need to set limit orders, and specifically within Fibonacci golden zones. When you are setting such when you are setting such limit orders, let it be around the golden zone. And what are the golden zone? Area between 0.5 and 0.618 retracement level, Fibonacci retracement level, are our golden word zone. They are our golden zone. Let me just do it like this. Now when you see 0 here and you see 61, see it here. From here 0.5 should be here. So from this particular place to this place is actually our golden zone. So when you are looking at the trade at this particular place, now you need to set orders, limit orders at this particular place. That means from 61, 50, 38, 23, and 00. Now you use it in order for you to set your what? Your limit orders. This is Fibonacci retracement zone. You can actually do that and then trade. Then the last thing that I want to tell us as regards things we ought to focus on is that you need to have a journal. You need to write aggressively. You need to have a journal. Record your success and your loss. And then what make you to succeed today, what make you to lose, record everything. And then you can even go as far as drawing the chart patterns that you saw and what happened in the market, so that you'll be able to learn from it and know how to tackle it tomorrow. That is one of the major things that traders don't do. They don't have a journal, a trading journal. You ought to have a trading journal. Collect data from every trade so that it will actually bounce. You can actually build, sorry, you can actually build a trading journal or a trading playbook, so that time to time you return back to your journal, you return back to your book, and then you begin to analyze what you have been seeing and what has been happening in the market. There must be seriousness in this, so you should have what you should have journal for your forex. And the last thing that I want to teach us before I end this video is how we can use key economic event that can actually cause volatility in the market. Three key economic event There are key economic events which can cause this in the market. Now, the first economic event, I'm going to show us where we can get the news from, and then at least every day you should check the news before you start trading. Check the news, check the place for the news before you start trading, so that you will not start trading and then later on news will be released, economic calendar will be released, and then it will go against you. The first one I want us to take note of is the NFP. The NFP. Now, the NFP stands for non-farm payroll. Now, this always happens the first Friday of each month. So now this October, the first Friday of October, which is tomorrow, we are going to what? Experience NFP. We're experiencing NFP by 1 p.m. Sometimes it starts from 1 p.m. down to 2 p.m. Now we have the CPI. Now the CPI stands for Consumer Price Index. CPI, Consumer Price Index. Now this is actually a mid-month inflation data. A mid-month inflation data. Now, when there is inflation in the market, especially in the Canadian dollars, in the US dollars, they give report as regards the inflation of things at the middle of the month, and then the last, which we all know, is the FOMC news. The FOMC news, which stands for Federal Reserve Interest Rate Discussion. FOMC news. Now, this FOMC news usually come at the end of the month. Now, usually on Wednesday in the evenings. So we need to take note of all these things. Now, these things are actually event that can actually shift the direction of the market totally. It can shift the market and the direction of the market totally. Now, let me show you where we can actually get to see those news. The website is Forex Factory. So the website for us to be able to get this news is Forex Factory. Now let's go to Forex Factory, forexfactory.com. forexfactory.com. Now you see Forex Factory. forexfactory.com. With this, now you'll be able to see the timing for the news, and also now when you see CPI is by 7:30 a.m. Thursday, which means it's today. CPI was done in the morning today by 7:30. You see it. While the unemployment claim tentatively we should experience it by 12:30 p.m. today in USDT. It affects only USDT, while the CPI affect the UHF. And it went negative. Now these are actually how we can be able to get the news. Now you can decide to select calendar so that you have an overall of the week where you want to know what's happening in the week. Now October, that's today. Yesterday we have the ISM manufacturing manufacturing, we have it. On Friday, we're going to be having the BOG government speaks. We'll also be having, which is the first Friday, like I told you, the NFP, non-farm payroll employment change. We're going to be having it by what? By 11 instead of 1. You see it is by what? By 11. By 11:05 a.m. in the morning. And then we also by 3 we have the ISM service. Now let me tell us one of the secret of trading this news. Now if this ISM service now always follow the direction of the non-farm payroll. That's just it. So if the non-farm payroll is bullish, the ISM will be bullish. Put that at the back of your mind. That is one of the secrets I will be sharing with us today. Now, during this session of the news, and also September, October, November, now your trading strategy will not change, but it is your risk management that change. Why? Because there is high volatility in the market. There is always high volatility in the market, so your trading ability will not change, but your skills, your of risk management, your skills of managing risks must change. You must reduce your risk management so that you get best result out of your trade. Thank you so much, everyone. Now, if you have not subscribed to this channel, do well to subscribe to the channel right now by clicking the subscribe button, and also click on the notification bell so that you'll be notified whenever I upload a video such as this. And don't be in a haste to give us comment. Don't be in a haste. Give us comment. Tell us what you actually got from this video and how it has helped you so much in your career, your trading career. Thank you. See you in the next video. Have a great day. Thank you for watching this video. Do like, share, comment, and subscribe to this channel for more information.